Gold is going up like we are about to have a hyperinflationary gamma ray burst of volatility out there. I've never seen this before. This kind of move, it doesn't happen for no reason. Are we in some kind of really weird, like, hyperinflationary bout that we're about to experience? Because, like, it hasn't happened yet, but gold is forward-looking. Are we going to have a currency crisis? Are we going to have a sovereign debt crisis? Welcome back to the Bullion Standard Podcast. Today was the FOMC meeting. We have a little bit to talk about around, what's going on with the Fed, what's going on with the Fed today, tomorrow, yesterday. I mean, really, at the end of the day, we're looking at how does this affect precious metals. But it's also very interesting because inside of the context of Kyle, the destabilized fourth turning, we really are going to see some institutional transformations. We've been inside of a broader decade of political transformation, if you might consider, the all the chaos that we've been through for the last decade. And so, how is the Fed going to be affected? How is the sovereignty of the Fed, the independence of the Fed, going to play out? It's typically a backwards-looking structure, a reactive structure. And do we want the Fed to be a forward-looking structure? Do we want the Fed pulling the levers? Do we want humans in control of that type of power, over our money, our economy? Well, the FOMC meeting was today. Everybody, today is Wednesday, January 28th, 2026. This episode, Charlie, will likely be released on Saturday, 3 days from now, so it might be a bit untimely, but it's just a couple days. So, yeah, we had the FOMC today. Rates obviously stayed the same. Gold, Charlie, I said on the very most recent episode we filmed that I was lost for words. I'm lost for words again. I have no words for what is going on right now. Gold is going up like we are about to have a hyperinflationary gamma ray burst of volatility out there. I've never seen this before. Gold is up about $300 per ounce today. Trade futures hit $5,600 per ounce today.
Wow.
Silver is up at $118.43 today. It's in the evening time here on Wednesday, so as of now, that's what it is. 4 trading days ago on Thursday, silver opened at about $94. By end of day Friday, it was well above $100. Now today, not even 1 week later, it's at $118. We recently did a very big silver trade. Somebody sold 10,000 silver eagles, 20 sealed monster boxes. When that trade got locked in on Friday, it was $1,050,000. Today, it's up another almost $160,000 for 10,000 ounces, just to give you some sense of how rapidly the market is changing. When it comes to the Fed, obviously the Fed is reactive and not proactive. And so my observations from today's FOMC meeting was that there wasn't a whole lot to be reactive about. The Fed is probably just kind of staying in its own lane right now. And I think that will be the theme until it needs to be reactive again, until some kind of news, some kind of data happens. Obviously, look at the gold price today. I don't have any words, again, for now 2 podcast episodes in a row. I have no words. I'm completely lost. I don't know what to say about what's going on other than, we don't want the gold price to go up. The gold price goes up as a form of insurance. Recall, we've talked about gold being that homeowner's insurance policy. Why would we want our houses to burn down? We don't want them to burn down. So what's going on, Charlie? What do you think about how gold is reacting today in relation to this FOMC meeting? And what do you think about in Eastern markets, specifically in Mumbai, India, and Shanghai, China? What what's going on with silver being materially higher priced over in those markets than it is here in Western markets, COMEX, LBMA, spot price?
Well, I'm not going to pretend that I have a crystal ball, but I think at the end of the day, I mean, we've been talking about it for years together, you and I, and it's possible that we are just finally getting to a point of equilibrium in a bunch of different categories, including the psychology, of what it means to have had a massive amount of inflation, through COVID, and where we're inside of this, volatility of, um, you know, macro change across many fronts. We're changing a lot of the structures globally. Just had the big Davos meeting, and there was lots of chatter about who's doing what, and Trump's talking about Greenland, and
Trump showed up to that, yeah.
yeah, so all these world leaders are pining for their fair share of stability across the planet, and so that's getting shaken up. So that's causing some destabilization. When you don't know where the path forward is, it's hard to make a move, except for the move in gold and silver. It's very easy to make a move in gold and silver when no one, or not no one, but when it's difficult to see a path forward to stability. So there's a myriad of complexities that we could point back to that we've already spoke about. But yeah, I think really at the end of the day, maybe a higher overarching theme is that the gap is getting filled. The gap of what is the antidote to destabilization? What is the antidote to debts and deficits, massive amount of government spending? What is the antidote to artificially controlled interest rates and money supply? Some physical hard assets.
It really feels like the whole world is taking a look at gold and silver now. There's a lot of mainstream narrative going on about it. This isn't a contrarian sector anymore, Charlie. Going back so many years now, it's always felt a bit contrarian. Now it feels a little weird because so many are participating now. Gold and silver are making headlines. We have big financial talking heads like Jim Cramer, multiple references to gold and silver now. I think it's getting noticed. Now that we're above the $5,000 mark, I think Fed Chair Powell had some comments about this rally in gold, and he kind of dismissed it and tried to say that the Fed is still kind of in control. But I want to say that this kind of move, it doesn't happen for no reason. And so
right.
There's a couple of things going on that I'm not smart enough to know. I don't think really anybody would be smart enough to know the answer to the following question. Are we in some kind of really weird, like, hyperinflationary bout that we're about to experience? Because, like, it hasn't happened yet, but gold is forward looking. And so it's kind of sniffing some stuff out here, I think. But I want to know what it's sniffing out. Are we going to have a currency crisis? Are we going to have a sovereign debt crisis? Obviously, if the shadow stats quoted rate of inflation is the true statistic and not the CP lie, inflation is probably a lot higher than it is here. We've talked about this a whole lot. And so this theme of rotating out of bonds, disintermediation out of the bond market and into gold across the board, this return to a 60-20-20 portfolio, or for the first time in history having a 60-20-20 portfolio. That feels like what's kind of going on here to me. And so that's never happened before. So my natural instinct here is to say, wow, this market is so hot, it's so overheated. I'm just waiting for the, it's been a hockey stick straight up. I'm waiting for the hockey stick right back down. But I don't know if that's going to come or not. I think
it will come. It's just a matter of time.
I think there will be volatility, but is silver's $118, Charlie. I mean, even if it goes back to 80, that would be a huge crash. And it's like 80s, it just feels like it's really high, but now it doesn't really feel that way anymore.
When will we have a massive drawdown? Will it be this year? Will it be in 2 years? Will it be after 2032?
I think we'll have a massive drawdown if the reasons why people are moving into precious metals don't end up actually materializing. But I don't think that's going to happen. So will there be, really high sustained inflation? Well, we've talked about this. The only way forward out of a $2 trillion per year deficit, now projected probably to be more like $2.5 trillion, is to print this money out of thin air. And that's just super inflationary. Quantitative easing, when is the next QE series going to be? Well, we need the right crisis. But everything is super hot and loaded here, Charlie. The commodities market is just going berserk here. Even as we were just discussing off camera, like the uranium market is up. It's at a new all-time high today. Of course, this is a commodity that's in supply deficit too, just like the rest of them. But I want to ask you the following question. And if you at home out there would ponder on this as well. What do you think will happen if the Fed just continues to do what we're doing? Like we're just going down this path. We're not raising interest rates. We're not lowering them. What do you think would happen to the price of gold and silver if, we don't have like this big official bout of inflation that like the market is pricing in right now?
Kyle, here's the thing. I don't have the answer to that. I think at the end of the day, are we going to have a productivity boom? Are we going to grow our way out of these massive debts and deficits? I think we're teeter-tottering. We're teeter-tottering back and forth. Again, as we've discussed in the past, we had the tariff tantrum. We tried to cut our way out of our conundrum that we're in fiscally. That didn't work. So now we're trying to incentivize growth through tariffs. I mean, that's really what we're doing. We're saying, hey, come back here, make it here, bring our manufacturing base back, bring our sovereignty and our national security back. So how well is that going to play out? Well, we've got a few wild cards out there that time will tell. We've got the AI complex. What will happen, when everyone has a robot in their house and, at work? I can't wait to be driving around and checking on, the properties with my AI companion. And when I need to lift something heavy, it gets out of the pickup truck and puts it into the back of the pickup truck for me.
And it has a kilo of silver in its battery pack.
Correct. And so, it's going to be an interesting next few years. So where are we at right now? Real estate, we're having some disinflationary impulses in real estate. Some areas we're having some deflation in, rents and home prices. What's our job market doing? We've continued to hear news about layoffs. What was it? Amazon is going to lay off 5% or something like that of their workforce. They announced, I think that was today. So how will this tumultuous time play out in 2026 and 2027 and in 2028? Will we have deflation? Will we have some one-off unique deflationary impulses in certain sectors? Will we have some black swans? Will they be big? Will they be small? At the end of the day, there's a lot of questions out there because there are many paths that could be taken, and we're heading towards the fork in the road. And it's not just one fork. It's like, we could go this way, this way, this way, or this way. But ultimately, if we don't grow our way out of our debts and deficits, we're gonna be in some trouble. And so, then we're gonna have some monetary controls because we can't have higher interest rates to service this huge national debt. So then enter, what's the consequence of Fed independence, on on our debts and deficits? Is the Fed going to say, hey, we got to hold our interest rates high here? Hey, we're going to, you know, or are they going to say, okay, we're going to lower rates because this is what we have to do?
The emergency 150 basis points rate hike would probably be the cure for what's going on right now in specifically the gold market. But that's not going to happen. And
yeah,
I
the
want
levers, the linkages and the piping that, you know, downstream from all that is pretty rough.
Let me just say that gold has, for the last 13 months, I believe, Charlie, has been up every single month for 13 months in a row. That has not happened since 1971 for any 12-month period, to give you some sense of the aggressiveness of the market right now. That's historic. The only way that would be going on is if the world collectively as a whole, and I'm going to quote Ray Dalio here actually because he talks a lot about this. Are we having a global monetary reset? And it's in its stealth phase right now.
Yes.
And if that's the case, like,
what stealth phase are we in right now? I mean, look at the...
Well, because the dollar, you can still go out and, you know, buy things with dollars, obviously. You know, the dollar's getting tanked today, but it's not completely worthless yet.
You're talking about like a total transformation of the types of money that are currently being used and what will replace them? Is that what you're talking
Correct.
about? Okay. Yeah, that's always, I mean, Bitcoin, people have been talking about that with Bitcoin for a very long time, and other, you know, cryptocurrencies, and
that whole community of crypto enthusiasts right now, I've been reading more and more. I kind of feel like they're not upset, but they really have, like, you know, the really maximalists for cryptocurrency have kind of missed the move in gold and silver. Like, the big move has kind of already happened. That first leg up of the low hanging fruit, in other words. And so I'm reading a lot about how they're, you know, not too happy that they missed that move.
Well, at the end of the day, I would say it's highly likely that me, you, and everyone else out there has missed moves, because nobody ever buys cycle bottoms and sells cycle tops consistently, if they ever even get one under their belt. So, you know, like, everyone's gonna... It's a totally natural and normal thing for everyone to say, oh yeah, like I feel like I've missed out. You know, it's the psychology. It's fear of missing out, fear of more losses. What did you call it at one point? FODL, fear of drastic losses. Photo.
Yeah.
Fear of drastically overpaying. That's right.
Well, the only person who bought the bottom and sold the top, I forgot who's saying this is, but the only person who bought the bottom and sold the top, like, perfectly
is a liar. Yeah, that doesn't happen. So, you know, what's the objective? The objective is to ultimately, you know, take on as much responsibility for your own growth and learning as you possibly can, in order to, you know, smooth out the wrinkles of the volatility and put yourself in the best position that you can put yourself in, given the circumstances of your portfolio and your earning power and your life. And so at the end of the day, you know, there's a psychological component to all of this. And if we can understand that, then we can take the best informed action.
Right. So I don't know what's going to happen. I think the market is so volatile right now. We're actually getting ready, Charlie, to send out an email. Typed up a nice email to send to all our community members, customers, members of Bullion Standard Pro, just to give a high-level take of what's going on right now. But I want to shift gears a little bit and talk about what we're seeing from the dealer point of view, from the global logistics supply chain for precious metals, vaulting, minting, distribution.
There's some heat in that system right now.
So one thing that we would want to share is that most people might not realize this, but all precious metals, vendors, dealers, wholesalers, minting, logistics, this whole complex system, it's actually a lot more interconnected than people might realize. there's only a very small group of like industry market makers, we'll call them, who we connect to aggregate live bid-ask pricing for our pro members. There's only a handful of them. And when everybody's kind of like, feeding off one another, and we get into these really hot situations where there's all this volatility in the market, things can break down very quickly. And so here's what's going on. We've seen this enormous gamma ray burst of volatility where metals prices are going like this, like up $20, down $20, up $20, down, up and down. When we have volatility like that, it creates all this market action for the physical retail denominated bullion products. There has been a ton of selling going on right now, Charlie. There is tens of thousands of packages amongst all of the distributor wholesale market makers. They're just waiting to get checked in. Why are they waiting to get checked in? Because there's not enough human logistical capital to process all of this material. And this is highly trained, highly specialized work that you can't just flip a switch on and hire for. So what's going on is that there's extreme backlogs. For most core bullion products right now, it's 3 weeks. It's 3 weeks. And this isn't because of a shortage. Of course, I want to be completely clear. What I'm talking about, because side note, we posted a video on Facebook.
You told me about
that.
And
it got like 80 or 90,000 views.
Yeah. Do you want to clarify what the video was and then clarify, the context that was missing from the video?
So the video on Facebook got it was a little short video from a longer podcast episode. I basically said, there's no silver shortage. What I was talking about was the physical retail denominated bullion products. There's no shortage of them right now. There's just extremely backlogged. So when you place an order right now, that material is just waiting to be checked in, but it's just on pause. So let me just say, Charlie, really quick. We got absolutely roasted in the video comment section of all these people saying all this mainstream hype stuff from these really big influencers, newsletter writers who have an agenda to hype and fear people up so they can sell them bullion at an egregiously high dealer markup. And it pisses me off a little bit that everybody out there is, driving people towards fear and FUD, and it's not the truth. And it's really disturbing sometimes to see. And it's like, hey, there's a silver shortage. Come buy your silver eagles from me for $20 over spot. People are like, oh, click the button. So what we're seeing right now is backlogs. Let's talk about this.
Well, let me ask you a question real quick. Or let me say something, and then you tell me if I got this wrong. But I think what the distinction that could be made here is that when you say shortage and supply deficit, maybe those two things get conflated. So the distinction would be like, hey, yes, while there is a broader overarching macro supply deficit baked into the cake, that doesn't mean that there's this shortage of materials right now. There's a backlog of processing the materials. Did I get that right?
So, right. Two markets, big 1,000-ounce silver bar market, COMEX, LBMA, Shanghai, Mumbai, retail denominated bullion products, everything that's not a 1,000-ounce bar or 400-ounce gold bar. There's these two different markets. It's probably $2 to $4 billion worth of retail product that could be delivered on at any one time. There's trillions of dollars of market cap of the big professional institutional size market, 1,000-ounce bar market. This is what we want to distinguish here. There is a supply deficit in silver. More of it is consumed every year than comes out of the ground. That number also includes investment demand. So then we have the retail denominated bullion market. That stuff trades in and out. People are always buying and selling this stuff.
And so what you're saying is there's no shortage in the retail market.
It's just backlogged.
Okay.
Oh, yeah. We could.
I mean, here's the thing with shorts, short videos. It's impossible to understand the context of, what somebody says in 1, 2, or 3 sentences. And, everyone has their own filter at which they meet the video, or the video meets them. And then it's like, well, that's immediately what the assumption is based on their context and what their belief is. And so, these short videos they're definitely controversial, to watch them, and they definitely get people hooked. And I think what you're saying, Kyle, is, you've created a program here, you've created a business that gives people an opportunity to keep as much of their hard-earned dollars, their blood, sweat, and tears that they've put in. It's very important to you that you do that as a service, to the broader markets, and it's been your purpose. It's been your drive. It's been the thing that has kept you working every day, very long hours for years now, and then it's kind of disheartening when you see when we're in these situations, that fear-driven impulse,
Right.
and then the consequence of, hey, we do have constraints, and therefore some people will charge a premium, and going back to everything that you've said, it's frustrating for you to see those premiums eat away at people's well-being financially.
So just to wrap up here on the kind of what's going on in the industry, there's just logistical breakdown. That's it. The whole thing, the whole worldwide kind of supply chain for these retail denominated bullion products, it's just backlogged because everybody is just getting inundated all at the same time. If there's one little part to fulfill someone's order that's, backlogged or something, yeah, it's going to be weeks.
And I haven't talked to you about this yet, but I'm assuming based on the price action that there's way more buyers than sellers right now. You tell me.
There is a ton of sellers right now.
Oh, really?
I would say it's 1-to-1.
Interesting.
Yep. I would say it's 1-to-1. On Friday last week, okay, not even a week ago, we were quoting 13 to 15 business days to process a purchase order, a buyback order, from the date the package is received at our depository. Now it's 30 business days. If you want to sell your material back here, 30 business days to get paid. I think there's a lot of people who think, oh, there's a shortage and you're suicidal for even thinking about selling your silver right now. It's going to go to the moon, all this stuff. Most of those comments on the Facebook video we were just talking about. But most people don't realize the whole reason we have this massive delay right now is because there's a ton of selling right now. Tens of thousands of packages just sitting at wholesale market makers just waiting to be checked in across the landscape, of course. And that's it. So I think we talked about in another video, will that ultimately not be the case one day where you just can't buy it at all, even with like a pre-sale or a back order? Yeah, absolutely. What do we need for that to happen? Something like COVID, something like a bank failure, some kind of big fear event, some kind of big market crash event, some kind of major catastrophe that just inflicts fear in people. And the one thing that gets hit the hardest when that happens is precious metals, physical precious metals, retail denominated precious metals. So yeah, the whole thing is just kind of interconnected, and there's just a little bit of a breakdown right now because, imagine you have a staff and you have, I don't know, a certain number of units you're doing every day. Mm-hmm. And then that certain number of units just
triples,
quadruples, 5Xs, 10Xs overnight because of the volatility in the market. When things stay level and things are even keel, 1 to 3 business day turnaround time. When it does this, Charlie.
Let me ask you a question, Kyle.
Big backups.
Does it matter if it's a supply deficit on physical precious metals or if there's just a backlog? Like, are we just seeing the same consequences regardless?
Since demand for silver includes investment demand, my point of view would be, and this is where we would get absolutely roasted, some hate in the comments. People think that the price of silver will just go up forever. Maybe we're in that new paradigm. Maybe it does.
Nothing ever goes up forever.
But people right now, Charlie, are taking advantage of higher prices and they're selling a lot of their product, their physical retail product. And I don't see that changing until they all get flushed out and that kind of cools down a bit on the volatility. And then from whatever happens from there, we'll see. One of the wild cards that I have kind of been waiting on and I don't know if it happens under the Trump administration or not, is China and Taiwan. There is a lot of boiling of the frog going on there, I think. And just like the Russia-Ukraine war, I think that will be the next major geopolitical event to happen, is some kind of conflict between China and Taiwan.
Well, this is why we're reshoring.
Yeah.
This is why we're reshoring, because we can see into the future, and there's instability, and so, I mean, we could talk for hours. We could go down those rabbit holes, and ultimately, what does it mean? It means for the foreseeable future, in the next short number of years, there's a tailwind for gold and silver. Here's a great quote. I don't remember exactly what it is, but this is something that this is just a quote to say, hey, what are we doing here? Well, we're hopefully helping people raise their sails to catch the wind instead of trying to move the boat by paddling. We don't have to paddle. We don't have to paddle heavily. We don't have to work every day, trying to move the boat. All we need to do is raise the sail. And so where are the winds blowing right now? And if you look far enough out, you can say, okay, these are the trade winds. I'm not going to worry so much about, am I going to be blown 2 or 3 degrees off course? And do I need to frantically, try and paddle the boat back on course? No, we've got a broad landing strip, of making course corrections, because we've got some time. And so, at the end of the day, this is what we're about. This is what we're doing here. We're trying to create some stability as much as we can, because we've got some volatility coming up, and then we're going to get in some hopeful years in the 2030s, and we're going to see just an amazing rebuilding, and it's going to be really awesome. Really excited for it.
I'd say most of the audience who view us, which is pretty nominal right now, but everybody here probably owns some gold, and everybody has raised their sail, and their sail is made out of gold bullion.
It is
and
giant golden sail.
These winds that are blowing around is the volatility, is the negative real interest rates, is the quantitative easing, is the geopolitical instability, is the Russia-Ukraine war, is all this stuff, and it's just blowing the sail.
Mm-hmm.
And hence why gold is now $5,600 an ounce in the futures market today,
mm-hmm.
on Wednesday, January 28th. I'm getting a bit cautious here, because
sure,
it's gone up so quickly, so fast. What don't we know that's happening? I'm going to continue to be, my jaw will continue to hit the floor. I think we're in the rip-roaring run of a major bull market in gold. And so I'm not going to make a prediction. I'm going to make a guarantee. As long as you're here with us at Bullion Standard, what we can guarantee you is that when you're making your bullion trades, you're going to get the absolute best real market price. And you're going to put all that friction in any other transaction directly back in your pocket. And that's it. That's what we can guarantee you. And so, Charlie, would you have any departing thoughts for our viewers, subscribers, Bullion Standard Pro members, potential customers, wandering minds, everybody and anybody? What would you like to say?
Yeah, I mean, I think everyone has to just look for themselves in the volatility. Do you take profits? Do you, do you not? It's like real estate. It's better to have time in the market than it is to try and time the market. And, maybe that's changing a little bit. If we have some stability in our government spending and we get some responsibility, that's not happening anytime soon. So, at the end of the day, if you need the money, and this is a great time to take profits. If you don't need the money and you have this really long outlook, you could take some profits, or you don't have to take profits, because the structure is baked into the human nature. And so, like, if you're going to trust something, you could trust that humans are reliable to continue to do what we've done for millennia.
Here's a really interesting question I'm going to leave us with as we wrap up the episode here. There's a reason for everything. At what point, at what price level for gold and silver does it equalize and make sense for the current state of affairs in the world? Let me put some context behind that. 1971 to 1980, gold went from 35 to 850. Very volatile decade. Huge bout of inflation. Inflation for most people went from being something that just kind of lingered on their shoulders to being a real problem where it's like, yeah, I can't buy my groceries anymore because everything has just gone up so much. Commodities just got insanely, lifted up by all the inflation, stagflation that happened in the 1970s. Again, in the 2000s, a lot of volatility, China consuming a lot of commodities. This guy who is a research house, kind of controversial, but they do put out really good, relevant info, CPM Group. The guy who is the principal of that organization wrote a book in the 2000s called Commodities Rising, fueled by the rapid growth in China. So so the question, obviously, at what price point do gold and silver equalize what's going on? And have they gone up enough now to where it's like it just price in everything? Now we're going to marinate here for a while. Or do we just moonshot? Silver goes to 200, 500, gold goes to 10,000. If gold goes to 10,000 here, I'm going to be very spooked.
Well, I mean, time will tell, Kyle. Time will tell. And so maybe one other thing to say is, hey, if you've done very well and you've taken profits, and there's an opportunity to be of support to someone that you care about or someone that you know, don't be afraid. Don't be afraid to help out someone in your community, someone in your family. I'm not saying just give someone some money, maybe, I don't know, but think about, it's almost a moral duty to be of service to others, especially when you're doing very well. And you never know when you're not going to be doing very well. And, if anyone's ever helped you out, you know how much it means to get some support when you're not doing very well. So
right.
Maybe take a look at that. Would be my only real heartfelt ask.
All right. Well, if you found this episode useful, informative, or helpful, we would sincerely appreciate it if you would like, share, subscribe. If you have any questions or comments, please leave them down below. We'll absolutely respond to them. And once again, thank you for being here. We hope to deliver extreme value for you going into the future. Remember, every ounce matters, and so does every insight. Remember to stay informed, stay committed to growth, and hold your bullion standard high.